What if I told you that just 3 weeks ago, silver hit the highest price in recorded human history and then lost nearly 40% of its value in a single day? And right now, today, as you're watching this, it's happening again. Today, we break it all down. Let's start with the numbers you need to know right now. As of Tuesday, February 24th, 2026, silver is trading at approximately $87.50 to $87.50 per ounce, down nearly 1% on the day. Over the past month alone, silver has fallen more than 15%. But here's what's wild. Look at the yearly chart. Silver is still up over 176% year over year. That's not a typo. 176%. So what on earth is going on? Why is silver dropping today? And is this a buying opportunity or a warning sign? Let's break it down piece by piece. To understand today, you have to understand what just happened in January. Silver exploded to a record all-time high of approximately $121 per ounce on January 29, 2026, driven by a speculative frenzy out of China, rising geopolitical tensions, and 6 straight years of structural supply shortages. Social media lit up, retail investors piled in. It was a mania. Then came January 30th. Silver collapsed over 38% in a single intraday session, the single largest one-day percentage drop in silver's recorded history. The CME exchange hiked margin requirements. A massive wave of forced liquidations hit simultaneously, and the speculative bubble violently deflated. Billions in paper wealth evaporated in hours. Now fast forward to today, and China is still the story. Chinese traders, who had been the primary fuel behind January's historic rally, are back from the Lunar New Year holiday, and they are selling. A massive fresh liquidation wave out of Shanghai is actively pressuring international silver prices right now on February 24th. But here's the twist. Chinese domestic silver prices are trading at a 10% premium over international rates. That tells us there is genuine, localized physical tightness inside China. Demand is real, but large institutional players are still liquidating paper positions, dragging the global price lower. This disconnect is confusing markets and creating extreme volatility. Meanwhile, Washington is adding fuel to the fire. The U.S. Supreme Court struck down President Trump's flagship reciprocal tariff program, but Trump immediately replaced it with a 15% flat global tariff, which is now in effect. That tariff chaos is a double-edged sword for silver. On one hand, it boosts safe haven demand. On the other, it creates the kind of economic uncertainty that forces institutional investors to raise cash by selling everything, including silver. On top of that, nuclear talks between the US and Iran are underway. If those talks break down, we could see a surge in geopolitical risk, which historically drives silver and gold sharply higher. Investors are watching those negotiations extremely closely. Here's the big picture story that doesn't go away no matter what happens day to day. According to the Silver Institute, 2026 marks the 6th consecutive year that global silver demand is expected to exceed supply. That means the world is consuming more silver than it's mining for 6 years running. That kind of structural deficit is historically rare and is the reason why silver's long-term price floor keeps rising. What's driving that demand? 3 words: solar, EVs, AI. Solar panels require enormous amounts of silver in their photovoltaic cells. Electric vehicles use silver in their electrical systems, battery management, and charging infrastructure. And now, AI data centers powered by NVIDIA chips and next-generation semiconductors are creating entirely new layers of silver demand. These industries don't care about today's price spike or today's crash. They need silver. Period. But there is a real headwind developing, and you need to know about it. Solar manufacturers, squeezed by silver's skyrocketing price after January's rally, are aggressively substituting silver with copper wherever technically possible. Some panels can reduce silver content or replace it partially with cheaper copper alternatives. If this trend accelerates industry-wide, it could structurally reduce one of silver's most important demand pillars. This is a developing story. The substitution is real. But experts note that copper comes with its own technical limitations for high-efficiency solar cells, so it's not a perfect swap. Watch this space. From a market standpoint, there are two critical price levels every silver watcher needs to know right now. $85 per ounce is the support floor. If silver breaks below $85 and stays there, it signals deeper selling pressure and could trigger a fresh wave of stop loss orders. Analysts say holding above $85 is crucial for any recovery narrative to stay intact. On the upside, $92 is the first major resistance zone. A clean break above $92 would signal that the correction is over and momentum is turning bullish again. The final wildcard? The US dollar. A weaker dollar makes silver cheaper for global buyers and historically sparks rallies. With tariff policy in chaos and the Fed still debating rate cuts, a dollar pullback could be the catalyst that reignites silver's upside. Here's what it all means. Silver is not in a simple bear market. It's in a violent post-speculative correction following one of the most extreme price surges and crashes in commodity market history. The underlying fundamentals, supply deficits, industrial demand from AI and clean energy, and geopolitical safe haven flows remain structurally bullish for the long term. But in the short term, volatility is the name of the game. China's behavior, US tariff policy, Iran nuclear talks, and the $85 support level are the four things to watch most closely in the days ahead. JPP. Morgan's global research team has a 2026 average price forecast of $81 per ounce, but with silver already above $87 and year-to-date gains of 176%, the debate about whether silver has found its new floor or has more pain ahead is very much alive. Stay informed, stay disciplined, and as always, do your own research. Disclaimer. This video is for informational and educational purposes only and does not constitute financial, investment, or trading advice. The information presented is based on publicly available data and market reports as of February 24, 2026. Commodity markets, including silver, are highly volatile and involve substantial risk of loss. Past performance is not indicative of future results. Always consult a licensed financial advisor before making any investment decisions. The creator of this content is not a registered investment advisor, broker-dealer, or financial institution. Investing in commodities carries significant risk and may not be suitable for all investors.